Everyone to our Women Investing in Tech panel brought to you by UVA Alumni Career Services. We have a fantastic panel for you today. So I'm going to go over the flow of the event just to give you guys an idea of how we're going to run things. We'll have our panel discussion first, which will be followed by Q&A. So please feel free to submit your question at any time in the chat box. If you have a question for a particular panelist, use their name in the question. And then we'll move into our informal networking where we'll rotate breakout rooms for about 30 minutes after the formal programming. So joining us on our panel today are Melody Ko, Jen Nisi, Chenzi Wang, and now I'd like to turn it over to our moderator, Christina Bowie. Christina.
Good afternoon. I'm Christina Bowie, college grad 88 and Chief Revenue Officer at Crayons, an accounting and financial solutions firm for venture-backed companies and venture capital funds in Silicon Valley. I'm an advisor to How Women Invest Fund and Stormbreaker Ventures, and invest in and served on a few company boards. I am pleased to moderate this panel of distinguished UVA alumni: Melody Ko, partner at Nextview Ventures; Jen Nisi, Senior Director at Microsoft Consulting Cloud Incubation; and Chenzi Wang, Managing General Partner at Rain Capital. Women control 32% of the world's wealth and have become a sizable economic force, and it's just going to continue to increase. But only 1 to 5% of accredited women investors are angel and venture investing, while 30% of men do. Women continue to make an immense impact in technology, and the opportunities to invest in the industry continue to grow. So now I would like the panelists to introduce yourselves. We'll start in the alphabetical order with Melody. Please share with the audience your career path and how you got started into investing.
Great. Thanks, Christina, and great meeting you all. I'm Melody Ko, currently partner at Nextview. We are an early stage, seed stage focused venture fund. I've been at Nextview for about 3 years, and kind of going all the way back to UVA, I was Comm School 07, finance accounting concentrations. And my journey started out to be pretty typical. I moved to New York after graduation for investment banking, joined a firm called Evercore, doing M&A advisory as an investment banking analyst. At the time, Evercore was a pretty small place. Everybody was a generalist, but I did probably most of my work in what I would define as tech, media, telecom, merger and acquisition stuff. I was there for 2 years, and then fortunately, my second job was in venture capital. I did not know what venture capital was, and one of the partners I worked for at Evercore recommended me interviewing for this role at Time Warner, the media company at the time. They had a venture team in New York, really small teams, completely separate from corporate development, and their full-time job was to make early stage venture style investments. I thought it was interesting because I had interest in technology and thought to give it a try, and which opened my eyes and first exposure in terms of what early stage venture looks like in the early stage ecosystem, specifically in New York. So I was a junior VC running around in New York about a decade ago, about 2 years, and went to business school in Boston at HBS. When I was there, it was not the plan to start a company, but I ended up starting a company when I was in school, probably 1 month in. And that was my first foray into what it takes to build a company. I didn't know what I was doing. Long story short, with the company, we raised a little bit of seed money, but didn't really work out. So graduating from business school, I came back to New York and wanted to actually learn how to build software. So I wanted to become a product manager, and then I became one at a late stage e-commerce company, venture-backed in New York called Fab.com. 8 months later, had the opportunity to join another really, really early stage startup called Blue Apron at the time. Blue Apron, as many of you know, were a pioneer in the meal kit space. And at the time, the company was about 20 people, 18 months old business in a co-working space. I was fortunate to join as the first product hire, and really kind of went through 3.5 years of hyper growth. I think 25x revenue in 3.5 years. the corporate team went from 20 people when I joined to 500 people, 6,000 nationally, including fulfillment centers. And I learned how to be a product manager, and then how to be a product leader and building product teams, design teams, analytics and data science teams when I was there and through our IPO. My early exposure in venture investing about a decade ago kind of opened the door for me to come back to venture investing now. So that's how I got back to investing, not as a master plan, but more of a serendipity. My partners now at NextView were looking to hire a partner in New York. And that was right around the time we were about to go public. And long story short, reconnected and rekindled my interest in coming back to the early stage investing. I've been doing early stage investing since about 3 years ago.
Okay, thanks, Melody. Jen?
Hi, everybody. Well, I'm probably the one person on the panel that has a much less formal background in investing. I'm engineering in 98, systems engineering. And I currently am a senior director at Microsoft, and I love my day job. I am fortunate to have, a global senior position there. So investing for me is kind of a bit of a side hustle and a way to channel my passion for entrepreneurship that maybe doesn't get satisfied quite so much in corporate America. So I love building things. I love what I do at Microsoft and the opportunities it gives me to really have big impact and at a broad level. But there's something about being able to talk to somebody one-on-one that is new, has a new idea and is excited. And so for me, I focus this on a personal investing approach. My brother-in-law is the serial startup guy, 3 exits before he was 40. And we do a lot of networking and talking, and, just kind of happened. I met a small group of people that were interested in private investing at a small scale. They needed some tech advice. I needed some advice on how to get started doing something like this. And it was just a really good introduction. And sort of from there, the network grew, my network grew. What I was able to bring to the table was valued from a tech perspective. And then we just started, looking for things that were the right fit for us as a group and me as an individual. And so right now, I continue to privately invest. I'm also a member, a limited partner in 2 other funds. One is a medium-sized investment fund. And they do a lot of technology investing there. So I contribute to reviewing a bunch of the pitches for them. And then I'm also a limited partner in a local fund that isn't necessarily tech oriented, but it's very community oriented. I'm about 90 minutes north of New York City in the Hudson Valley. And we have a plethora of great stuff and great resources between the universities and agriculture and just the Hudson Valley in general. And if you look at it, 90% of all venture capital money that comes into the state of New York is all in Manhattan. And so there's a really committed group across the state of New York that's trying to funnel some of that out of the city to other areas where there are talent pools. So those are the sort of passion things that I go for, and it's a much less formal. My day job is my day job. This is my nights and weekends.
Wow, you're a busy person. Chengxi?
Hi, very nice to meet everyone. I'm Chenxi Wang. I graduated with a PhD in computer science in 2001 from UVA School of Engineering. So it's very nice to come back and speak to UVA alums again. I did a variety of different things after I graduated. My first job was a computer science professor at Carnegie Mellon University. I was teaching computer security.
Oh, let's see. We're lost Chensey there.
Research, started covering a ton of security technology and markets, and that's where am I frozen?
You're back. We lost you for a minute.
Okay, I saw you guys were smiling, and I'm like, that must be. I'm frozen a little bit. It's technology is not on our side today, huh? Which part that I talked about that I need to repeat?
Just go back to the university background.
Okay, so after I graduated with from UVA, my first job was faculty member at Carnegie Mellon University teaching computer science and with computer security as a specialty. So I did that for several years, and then I moved to Silicon Valley and did a startup with a bunch of friends, and didn't go really well because it was too early for the market. But I learned a ton about building a company and go to market. After that, I was recruited by Forrester Research. I was VP of Research, helped build up the security coverage area for Forrester, and learned a lot about the market and what people wanted in terms of security products. And then after that, I went and I took a number of operator roles, executives in large companies and small companies. And my latest job was CSO at a startup, which were acquired by Palo Alto Networks at, we achieved 65x return on the seed investment, so which was a very nice exit for all of us. And then after that, well, during that period of time, I was doing angel investing, much like what Jen does today. And a few of the angel investments have generated a really great outcome along with the company I was with. And so I decided that I've done a lot of different things: academic research, industry research, and operator roles. The one segment that I hadn't done a lot at that time was consistent investment. So I decided to try my hands at venture investing. So I left my company and raised a venture fund to focus on early stage enterprise software and cybersecurity investment, because cybersecurity is my background. So the fund, we closed in early 2018, and it's been a little over 2 years, been investing, deploying capital from the fund, and invested in some great companies. So very happy to be back and talk about my experience.
Okay, thanks, Chancy. And Jen and Chancy, since you both came from the engineering school, how has your technical background opened opportunities in investing? Is it necessary to come from the technical background?
I'll start, and Jen, you can jump in. So I think it helps. I think in my view, it helps a great deal, but I wouldn't say it's absolutely necessary. I think it lends a very different lens for you to be looking at an investment project. So for instance, a lot of times I get on a call with entrepreneurs talking about their approach, their product, and I provide a feedback that is oftentimes I hear is deeper than many other investors, and they get a lot from the conversation with me. And sometimes it provides it as a differentiation for our fund, so they want to work with us because we have that technical viewpoint. And also in connecting with customers, we have a very loyal set of end users that connecting with us, and they trust our opinions in picking the right technology because that technical know-how. So I think it helps, but not necessarily is something that you have to have on the investment team, but you have to have the ecosystem that provides you with that.
Yeah, I would completely agree with that. You know, I've been brought into groups and opportunities because I can provide that technical perspective. And regardless of the industry you're interested in investing in, there will be a technical aspect to it. But if you're not technical by background and you bring something else to the table, you know, find your own personal CTO, somebody that's going to help you understand the harder stuff. Don't be afraid. I mean, technology moves so fast, even those of us with a tech background, you know, you're constantly having to learn, and that's it. You're going to learn, you're not going to know necessarily, and you just have to be comfortable with that. You know, find something you're passionate about, surround yourself with people you trust that complement your skills. And, you know, I think Chancy hit the nail on the head. In addition to these entrepreneurs that are looking for financial investment. They're also looking for investors that are committed to them and can bring value and perspective to them, having done this, having invested before, having advised other companies through their early years, months and years. And so, the technology background is nice and it's an asset for me, but there's a ton of other things that I need to bring other people in and around, right? I wouldn't be able to do this just with a tech background. So it's a team effort, and you have to be committed to be curious and courageous and, just ask questions. That is the one thing I have found, not being in this industry necessarily as my profession. It's been the community of people that are willing to give you answers if you just have the courage to ask is fantastic.
Yeah. Melody, so what advice do you have for those without a technical background and are interested in investing in tech?
Yeah, so I would say that, well, a couple of things. One, I think technology investments and technology companies these days is a pretty broadly defined terms. You range from things that are more highly technical, more on the infrastructure side of the stack, developer tools, to cybersecurity, to digital health, which is honestly like more of a health driven as opposed to tech driven play, to consumer e-commerce, consumer social, which requires a different way of looking at those companies. So I would say that my personal experience has been that my product background has really helped in two ways. And product is not like about, this is like how you should, write the code, or I'm not in a conversation with most founders about the stack of their choice, right? Because they should have a CTO who make the right choice. However, I think the product experience helps me in two ways, which I also think is applicable in thinking about this question. One is about vetting and one is about winning. So what are the things that helps you to vet whether this is a good investment, right? So we talked about technical diligence. And from me, I wear my product hat to think about what are the user problems they're solving? And are they shaping the solution in a way that makes sense at the earliest stage? But I also think about what's their go-to-market. How do you acquire customers? And what does the B2B sales motion look like? So vetting is different. And then winning is about, well, why do they want to take my money, right, versus someone else's money? Because most of the time, you're not buying stock in a public market. It's a limited set of cap table slots that people can allow for. So, then the conversation is about okay, how do my, not just a product experience, but also I've built companies before. And I've helped build companies and helped build teams. So those muscles come handy as I'm on your board and help you along the earliest stage journey. And that's my pitch when I talk to founders. And everybody's pitch is different. So I think it's really about what's your unique edge in judging and what's your unique edge in winning? And what aspects of that? You can be also, by the way, you can be an ultra networker whose edge in winning is, I know I can send you 20 engineer candidates the minute you take my check, and because I can refer you, have a strong network, and everybody has a different edge. And I think technology know-how is one of them. But that's really how I would think about that question as well.
Yeah, thanks. And then what other experience is applicable? How did you pick up reading financial statements or, for the engineers? How did you learn all of that?
So I can add a little bit, and my perspective on this goes beyond just venture investing. In fact, last year, I joined a public board as a member of board of directors. And the reason I joined is because they wanted cybersecurity expertise on the board, and as well as someone who brings a high-tech industry perspective. And this is for a traditional public utility company. And I can tell you, as much financial statements you would need, you will read in a private investment is nothing comparing to the public financial statements that you will go through on the public board. And so we go through a ton of materials every quarter. Now, I'm an engineer in training, computer scientist. Before I got into investment, I didn't do a lot of financial analysis, right? So how do you get up to speed? You learn just like anything else, right? So you learn to look for patterns, right? I don't have time to go through every little detail, but I can pick up anomalies pretty well because I've trained myself to look for patterns, look for things that are commonality across different financial statements. And that's how you get efficiency out of this. And the more you do it, the better you get. And also I bring my public company experience to help my investments, because some of the companies that we invest in the later stage might be looking at going public, going IPO. So how would they structure their finance? How would they structure their governance for the company? A lot of that I can provide as input.
And I would say, don't expect to start off at that level, right? It's a learning curve. It's the same way you process your any other formal education or hobby outside of work. There's steps along the way. Find a mentor, find somebody else that does this. There's really, a lot of the universities just around the globe actually offer these entrepreneurship degrees and stuff. A lot of those also have partnerships within the community. And you will see, opportunities for groups and investment groups that are maybe smaller profile with particular missions, whether it's local or trying to enhance that entrepreneurship degree. And you'll find people that can mentor you there through the areas that are gaps for you as you're learning. And then it's just experience and time and being okay with learning from others and asking questions. I'm going to say that a lot this afternoon. I ask a ton of questions.
That's great. Melody, do you have anything to add?
Well, I learned reading financial statements at comm school, so thanks for that. I'm not half joking, because honestly, I'm really glad that I was thinking about concentration, and at comm school you can pick two, and I was like, here's my realization: there are two things that are really hard to learn once you're out of school. I think one is actually, I wish I'd taken some CS classes, and the other is accounting. Like, you're never going to sit here and read a book of accounting 201, and that reps really helps. And it's not about like, I'm not an accountant, but it really helps. From my side of the table, right, it's like different set. Like, I had to learn the technical stuff in my career. And, I think what I tell people these days is that, look, 20 years ago, there was no internet. So it was actually really hard to pick things up. Now there's this thing called the internet. So if you have a question, you can find answers and classes and things. I'll give you an example. Like, I was interviewing for my first product role, and I read the JD and it says SQL knowledge. I was like, okay, I don't know what that is. So I looked up the database class and I watched it. I think it was like a Stanford database basic class on one of those video classes. And I just watched it for 3 days, and I know how to write some very basic, selective where. And obviously they didn't quiz me on this during an interview, but as it turns out, I actually need to know how to write SQL once I showed up on the job, because the company was still pretty small and there's no dedicated analyst and data science team. So I was like, I need answers. I need to just go into the GUI and get data out. And that understanding the database structure really helped me understand our stack. And then as from there on, it got more and more technically fluent, and not in a way of writing code, but in a way of I can converse with engineers and be like, this is not how we should build it. How about this? Because my job as a product person is a blend of technical and business decisions, and having that fluency really helped. So I just encourage people to not think of anything as unlearnable, and really push yourself to get fluent, and find opportunities in your professional setting or in personal setting, right? Like, people ask me oh, how do you learn how to build? I'm like, well, pick a project. And, I had a block years ago, and then I was monkeying around with the HTML, CSS, and I still have very basic knowledge, but I can open an inspector and know a little bit of how front end is done, right? So that stuff helps and adds up. So I encourage people to really get your hands dirty on things that you don't think that you have academic training.
Great, thanks. My first investment came through someone who worked for me, and 10 years later, he had started an education technology company 5 years before, and with the trust that we built, having worked with me, he said, "I want you on my board, and will you invest in my company?" And I really believed in the initiative. So building your network is very important. And once you do your first one, I think the next companies sort of organically come along. You build. You could really build your network. Can you share? We'll start with Chancy about how what the value of building a network is and how it impacted you.
Yes, so I would say a network, even outside of investment, is extremely important. And within investment, it's probably even more important than other roles. So my first angel investment came from my network. And just like you, Christina. And in fact, most of my career opportunities came from my network. And building a network both inside your company and outside is extremely important. And like UVA has a great alum network, and that's a good network to tap into as well. And for me, the professional network is what gets me going in a lot of days. When I have challenges, I can tap into that network. When I have a question, I can tap into that network. And in fact, recently I built a women in security, an executive women in security network myself. And we started actually during COVID, and now it's blossoming into a very active community with C-level executives from very different companies. And we share career advice opportunities as well as investment opportunities. And in fact, a few of us became angel investors in a very exciting new startup in New York City recently. So, and that all came from that network.
Oh, that's great. Jen, can you tell us about your Hudson Valley network and anything else?
No, there's that one is a little bit off topic, I would say, for the intention of this panel, but I would agree with you, Christina. The first one, as someone that's a private investor, it was a conversation. A friend of a friend wasn't sure if this was a viable idea. Could I look at their pitch deck and do some validation and ask some questions? And then from there, we ended up investing and taking that forward. And then from there, you start to, I keep hearing the word network in this conversation, and it doesn't have to be a huge volume of individuals to get started. It's often that one trusted connection you have, and someone is going out and putting themselves out there on a limb, and they trust you for both advice and support as an investor in whatever they're taking on. And from there, you start to connect to others, because likely you're not going to be the only investor. So you'll make connections that way. And then it sort of happens organically. Right now, to give sort of real world scale, like for somebody like me that does this very, on the side, we have a good friend that probably gets about 15 pitches a week. He's a private investor. Of those, probably 2 to 3 have some tech component, and we'll look at 1 to 2 of those a week to just sort of see if it's something that we would be interested in, or we could provide some advice and direction on. And that's the volume I deal with right here. It's a pretty, because, I have to balance, right? My corporate job could take 100 hours a week. This could take 100 hours a week. I do have, the children and pets that need to be fed and watered. And so, there's a balance there somewhere for me. So that's kind of what my experience and my volume looks like.
Wow. Melody, so do the companies find you, or do you find them? Tell us about yours.
As a professional investor who's in, this is my full-time job, we call it inbound versus outbound. Inbound is, built on existing network that I kind of was fortunate to be able to build over the past decade or so. But outbound is very important too. We are seed stage investors, which means a lot of times when we invest, the company is not even formed, or there's just an idea or a concept. And it's a competitive environment. There are probably 900 seed funds right now out there. We, large and small, and across all different sectors. And for us, what we think top of mind is like, what are the ways for us to get to know talented founders years before they start companies? So a lot of our activities is around that. And, how I think about it is, so I have quite a few of these like calls or meetings that are scheduled that are for no other purpose, just to get to know talented people, because it's a long range investment. Like maybe 5 years from now, this person becomes a founder. And maybe 5 years from now, this person's friend becomes a founder, right? And then if I made a strong positive impression of an investor who can add value and knows what she's talking about, I can be top of mind and be the first 3 introductions that came my way when this company is getting formed. So that's how we think about it at a professional level. And every venture firm who is serious about their business constantly thinks about how to broaden, kind of, we talk about is like top of the funnel, and brand building, touch points, and building a network within the ecosystem, and such. So.
Mm-hmm. Yeah. So Jency, what are the top things that you look for in the company that's pitching to you, since Melody started us on that topic?
Yeah. So as Melody said, every professional investing team has an approach, and probably everybody has a framework of which to evaluate investment opportunities, and we do as well. Since our team is very tech-centric, we look at the problem that the team is tackling first, right? So if we get a pitch, or we go out look for a team that has a specific approach, we look at the problem and we look at it from a user standpoint. Because so I invest in cybersecurity, and because I've been a user before, and I still work with security leadership in my public board role. So I look at a lot of things from a user standpoint. And we also have folks on our team that are current CISOs, Chief Information Security Officer. So they are the recipients of technical approaches. So we look at, and first we decide, is that problem even compelling to tackle? If it's not compelling, we don't even go beyond that stage. If the problem is compelling, something that people would like go climbing over themselves to pay to solve, right? And that's when we go to the next stage, is when we look at the team, how good the team is. And then we also look at the differentiation of the tech, how large the technical moat is. And we also look at how big the market is, right? So how large the market is a big thing. I can say that from an analyst standpoint, I used to be research analyst at Forrester. How big the market is, it doesn't necessarily factor into the research analyst view, but as an investor, that's an extremely important point. So I guess the problem, the team, how large the market is, and how robust the technical moat is essentially the framework that we follow.
Okay, Jen, do you have anything to add?
Yeah, I mean, I would say for us, for me personally, there's really 4 key data points that I look at and try to understand or ask questions about. The first, I know we spent a lot of time talking about founders. For us, it's, the commitment, the passion. Are they doing this as a side job, or are they really committed and this is what they're going after? That's a big deal. And, and also, what's their philosophy on taking on money, taking on board seats? Are they willing to give up control, long, short-term view? We also look pretty heavily, at the solution value differentiator. So for me, like anything that comes across on the tech side of the house, it's like, could the open source community or like Microsoft build this in a weekend? Like, what's the true differentiator in the IP or the software? And, is it like first to market, or is it uniquely valuable? Like, where are we at here? They both have potential, right? I mean, if you're really first to market and you can get it out the door, there's definitely potential there, but the risk of them being overtaken by some of the bigger type of companies, like the one I have my day job at, is real. So, and from a business plan perspective, we look at it in a lot less, I would say, formal way than I think I hear Melody and Chunzi talking about, because for me, that's not my area of strength. It's very much around like, hey, how are they going to make money? When do they expect it to happen? How are they going to scale? Is it through customer acquisition, or, will the scale come organically? It's a much, I would say, wishy-washy approach, but we do have a set of questions, and I tend to focus on. And then the fourth sort of pivot I look at is the deal construct, right? So what's the current evaluation, and is it reasonable, right? We get a bunch of pitches where it is totally like just doesn't seem realistic. How is it set, right? Is it market hype? Is it revenue run rate? Is it, where is this coming from? And, is the company giving up equity to others? Those sort of questions. And I would say for me, and I've had this personal experience where, there's the investment is about the founder. It's about the deal, and you can have a great founder and you can have a great idea, and it can still be a bad deal. Like we've had a ton of those where it's just like, oh gosh, something isn't right. And I don't know what that something is, and so everything has to be in balance. So I haven't found as an individual that there's some checklist I can go through. I ask a bunch of questions, and then it's kind of, do I feel like there's a personal connection to this founder and what they're trying to achieve and how they're trying to change the world? Because ultimately, yeah, I want to get something back on the financial side of the house, but there's this sort of, I don't know what, the altruistic side that I just want to feel like I'm contributing to something good and meaningful as well. So.
Great, thanks. And we have the last question. How do we enable opportunities for more women investors? Do you want to start, Melody?
The toughest question is for me. I think one thing is like helping, be a strong community and help support each other. So, I'm part of this org that I know many female investors are also part of, called All Raise, and they have, it's a volunteer org, and then I have a professional CEO, so it's not just VC's volunteer job at night, and their goal is to really increase the count of both women founders and funders, and they do a lot of activities that really try to help us as a professional female investors succeed. And we can do that. And I think that that organization is a great example in terms of facilitating how we support each other, right? A very simple thing is like sharing deal flow and collaborating on diligence and being advocate for each other, even like on the board or off the board, and solve professional questions and challenges as you kind of progress as a professional investor. I know there are also quite a few angel investors involved in All Raise as well. But I think that's just an example. And I think that, the other thing I would say is, I think something that I try to do is like pretty small, but like if you're in a room with a bunch of men, and then like there are also some women in the room, try to like help them create airtime so that they get to speak up and be present. Because I sometimes notice that like, they don't get as much airtime as they deserve. And those are little things that are going to help each other kind of succeed professionally, which are building blocks as indirectly or indirectly related to how you become an investor here and build a strong network from here on. So.
Chelsea?
Yes, so the network that Melody mentioned is All Raise, and I'm also part of All Raise. And actually, we recently did a forum, and I was on the panel with a number of other women founders talking about how women investors can enable more women to get funding. And that was one of the goals of my fund. When I started my fund, I said I want to remove barriers for women entrepreneurs to get funding. A few years ago, I think the statistics in Silicon Valley was abysmal. We have like 2% of women of the venture funds going to women entrepreneurs. So thinking about our fund, I started in 2018, a little over 2 years. Right now, 45% of our companies are women founders. So 45% comparing to 2% is a huge difference. And we don't actually have a mandate to fund women entrepreneurs. The only difference is that we try very, very hard to remove implicit bias. We also go out proactively looking for women entrepreneurs, folks that I think are ripe for founding their own companies, or people who are great as a co-founder with others. So we've done a lot of those, and that really, really made a difference. And another thing, I think, if you are someone who's thinking about getting into the investment space, right, you don't have to necessarily follow the traditional path of venture fund, which is, go get an MBA and join a fund as a junior associate and work your way up. You could do something like what Jen and I did, became an angel investor. And the way to find good angel investing opportunities is networking. So I know that Silicon Valley has an angel network. New York has New York Angels Group. All these places are open to new investors. And you could find a way in by getting to know one of those folks in the group. And once you do 1 or 2 angel investment deals, then you might get to know more opportunities came from this group or others, and then it became more of a consistent thing. Or you could do something like me. I did a lot of venture consulting in the past, but it was not like anybody's going to hire me as a general partner, because becoming a general partner was really, really difficult thing. You have to prove that you've come from a financial background, you've done a lot of investment. And I said, well, so what? I'll found my own fund. So that's what I did. So if, everything's possible. Just find where your passion is and what you can do in that aligns with your passion. And I think investment will happen.
Okay, Jen?
I don't know that I have much more to add on that. I would just say the diversity of the people you surround yourself with, right? When you're making investment decisions, angel or limited partnerships, or whether it's your full-time job or what have you, having a diverse investment group tends to push more diverse entrepreneurs through your pipeline, because their networks are varied, and so just getting that variety of opportunities, coming across your desk, you're going to have a better chance. And I love what Chency said about removing the implicit bias, right? If you just sort of look at the deal for the deal's sake and don't factor in where it's coming from up front, you tend not to filter out opportunities based on conscious or unconscious biases.
Oh, that's great. Thanks, Jen. And so I'm going to hand it over to Amanda to lead Q&A.
Great. Thanks, Christina. And thanks to everyone for a really robust discussion this afternoon or morning, depending on where you are. So I've been collecting the questions and we're just going to jump in. We're going to answer as many as we can. I think some that came in, I think were pretty much answered. So, but if anything else pops up as we're going through these, feel free to pop it in the chat. So one of the questions we received was, what board roles are available for this investing space, meaning like mentoring or oversight versus simply being versus solely being the investor? What type of board roles have you experienced or that you know of?
I'll start.
Okay.
So
that's open.
yeah, so and a number of different board roles are available. Advisory board is one. I think it's probably easiest to get into, right? Jen's on probably a few advisory boards. And once you are in on advisory board, it's not as much a fiduciary duty, but it's really helping them when they have a question, or act as a sounding board, or sometimes helping the entrepreneurs making valuable connections. So, and typically people are, if you come with valuable skill set or background, you might be asked to join the advisory board. So that's one. And an actual board, which is more of a governance role. Sometimes investors take a board seat based on the size of investment. And other times there are independent board seats on company boards. What independent means is you're not necessarily an investor, you're not a company operator, you are outsider, to lend that outsider perspective, which is also very valuable. And sometimes independent board seats are taken by folks who are thought leaders in the company and in the industry, and it can bring that very valuable perspective to the team. And then the third one is public board. So I'm on the public board seat, and that's totally have nothing to do with investment. And public boards, they look for specific skill set to complement the company executive, such as financial oversight or legal oversight. In my case, I was brought on as a digital director to lend that high-tech digital transformation perspective. And I noticed there was a question about ESG. I'm also sitting on the ESG committee of the company. So ESG perspective or expertise has become a large sort of a trend in getting independent directors as well.
I can add quickly. I think that's what Chenzi says is a really good framework. For someone who is not in a professional investment role, who is more junior, meaning earlier in your career, I would suggest to start by really, see companies I'm just going to call it early stage because that's the area that I spent a lot of time in. Startups and early stage companies that you think are really interesting, and think of ways that you can be helpful. Let's say you come from a finance background. So you're not really useful in terms of product or marketing or engineering or sales, but a lot of, more CEO founders than you think actually don't have a classic financial training. So they have to deal with the board like me, or reporting and things like that, projections, scenario, cash flow modeling. And, you can be helpful and value add in that way. And, that can lend into do the work before you get the role, and then you get the role. So I would think from that mindset, when you're more junior in your career, as you get more senior, let's say you're a VP of marketing at a fast growing enterprise SaaS company, right? So when this other company that is raised, at the stage of growth and Series B or Series C, they will probably start looking for an independent board director, sometimes even earlier. And again, looking for an independent board director, usually the mindset is like, what are the types of key skill set and expertise level that we want to add to the composition of the board? And you can become a candidate of that. And a lot of questions are going to be around well, how do I get found? Well, this goes back to network, right? So being known as a known quantity and in notes that know these openings, i.e. investors, other successful founders, CEOs, because we're gonna, if I'm on the board of a company and our founders say, hey, I want an independent board director who's scaled a company through, going public, who is in a marketing background. And I'm gonna be like, okay, here are the 5 people I know. And here are the names I'm gonna send to our founder CEO who's asked for a recommendation. So how do you get on the radar is to try to get to know these and build yourself up to be in a position to catalyze on those opportunities. So that's kind of the framework I would think about. And I think public boards is actually quite similar, right? It's just like a next level game. But again, you need to be known to be one of those candidates that could be ready to get plugged in if an opportunity comes your way.
So I would add one thing. I think Melody talked a lot about building a network and getting to know the right people. I think that's important. One other thing that is extremely important if your goal is to getting on boards and public boards and private boards is you have to do good work at where you
Yes.
are. There's no replacement for being known for deliver good work and good outcome. And then opportunities will come your way.
Yes.
Yeah, and pay it forward. So, you know, the more you do for them, the more value you bring, and then they'll bring you on their boards.
Yes.
Right. Well, since Chenzi sort of touched on it, I'm going to jump into the next question, which is about ESG investing. Do any of you, including Chenzi, have experience with specifically investing in ESG investing ventures? If so, can you share a little bit about your experience or any insights?
So we don't have an ESG mandate at NextView. However, our thesis is about thinking about digital redesign of everyday user lives. And coincidentally, some of the investments that we make, kind of end up having that component. An example, I think we're actually quite a few of our portfolio companies, for example, are certified B Corp. So they have that kind of triple bottom line type nature, whether it's increasing the accessibility of financial advice for student loan repayment to an e-commerce platform that is targeted about selling and curating sustainable and chemical-free products in household CPG space. So I think that we think about it as, hey, this is an interesting opportunity because consumers increasingly care a lot, and consumers care because it's an important issue. So thus there's money to be made there. And that's how we think about it, even though we don't have an explicit ESG management.
I think ESG matters a lot in the public company space. And for those on the call who doesn't know what ESG is, ESG stands for environmental, social, and governance. So this is for companies that have have demonstrated social responsibility, environmental responsibility, and good governance. And in the public company space these days, many companies are asked by their large institutional investors to show that they have ESG focus and ESG initiatives. In fact, I think Goldman Sachs has put out guidance that they will not recommend investment into companies who are not focused on ESG initiatives. So that means that you have, as a company, you have to be socially responsible. You have to be environmentally responsible. Now, as a private company, the investment into private companies based on ESG metrics is potentially a little bit rare, I would say. But large funds, some funds that have impact investing mandate, they would look for companies that fit into this ESG framework and fund them. And some large funds will have percentage of investment that has to be ESG centric or ESG friendly. So they will also look for that kind of company that fit profile of environmentally friendly or social responsible companies. So I would say, and there's also a question about nonprofit. I would say impact investors or impact-centric investors are what you wanted to talk to about ESG investment or nonprofit that has a social bend.
Yeah, and as a private investor, you sort of get to do your evaluations and put your money where you feel like it is the most socially, ethically responsible decision. So with or without particular ESG metrics.
All right, so next question. Someone who attended would love to hear more about raising funds for a fund, and somewhat related in terms of raising funds, amounts of money, what have you. Another question was, what are typical ticket sizes to be an angel investor? So I figured I'd pop both of those in there and put them up for discussion.
I can answer the annual check size question from like how we've seen it in the institute front as an institutional investor. I would say that typically smallest check I have seen, it's like 25K to 50K range. Now, there are two ways you can get in with smaller checks. So the reason why checks are bigger, because if I'm a founder and I'm raising $1 million round, it is a lot of work for me to manage a lot of investors on my cap table, right? So ideally, I want the check size to be larger just for communications and logistics sake. Now, that being said, if you can be special value add, right? Sometimes you hear terms like dollar for dollar, so and so is like the most worth check or the best on our cap table, right? So if you can deliver outsized know-how and help, you can't squeeze yourself in with as small as a 5K check. I've seen, for example, the Blue Apron founder, CTO, he does like 5K checks into companies, and people let him in because he can provide advice in terms of scaling companies and technical orgs. So I think it just depends. I think the other question is related to the raising a fund. So I did not start NextView, but we just went through raising our latest fund. So I was in the process, dealing with LPs and pitching, and that is a really painful job. I mean, we love our LPs, but LPs mean limited partners, who are the firm people with money that gives us the money for us to invest, and we're the steward of their money. So these institutions range from family offices to UVA endowment to pension funds, hospital endowments, insurance companies, blah, 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 blah. The reason they're kind of a pain is because they take a long time to get to know you, because they're backing you as managers, because they have to trust how you evaluate, how you build firms, how you build portfolios. So we've had many instances where a institutional LP took 3 fund cycles to get to know us and then invest, which is like a 6-7 year journey. And we're about 10-year old. We just hit our 10-year-old this year. So we just finished our fund 4, and it's a brick by brick process. So it is not easy, especially for people who are starting out raising first time funds, especially as a first time fund manager. People who have easier times are people who spin out of known entities. Like if I were a partner at Kleiner Perkins and I spin out and like raise my own fund, I probably have no problem raising my very first fund, or in fact the second. So the kind of relative scale of difficulty kind of goes in there.
Yeah, I would agree. So because I raised my own fund, right? So I went through that process. It's a very difficult process. And I would say that, as Melody said, there are a lot of institutional investors will take multiple fund cycles to get to know you, and then they feel comfortable investing. So how would you as a first time fund manager like me get invested? You can't, right? Because they have this particular bias or particular requirement. So I've had multiple conversations with folks. They will say, hey, we really like you, but we just can't invest in first fund because that's how we operate. And then I tell them, look, that's your choice, but you are being archaic. So seriously, because there are so many different ways to raise money now. And I'm actually exploring for my next fund. I'm exploring outside as well as traditional fundraising channels. I'm exploring outside crowdfunding channels because I'm a firm believer of the technology platforms that are, we built that for community. We can possibly leverage that for fundraising. So I'm going to beat the game. I'm not going to go and beat on doors of archaic institutional investors. That's all I'm going to say.
I love that. And in fact, I think that was exactly what I wanted to just add on. At the individual level, our investments are usually exactly what Melody said, around 25K. There's a couple bigger ones that we felt really confident in that were more sizable investments. But we do have friends that crowdsource. They can get in on something for like $1,000, maybe 5,000, and they're in the door, and they don't necessarily have that name recognition that Melody was talking about. It's just this is where they're comfortable putting their money until there's an exit that gives them something a little bit more liquid to play with. And, you know, I misunderstood maybe, was the second question about how do you raise funds as an entrepreneur? Or how do you raise funds as a VC?
It was how to raise funds if you're founding your own fund or if you're raising
Yeah.
a fund. Yeah.
So I would say if you're going in front of somebody like me and you want, you know, 25, 50, 100K out of me, it's give me a really crisp 10 slide pitch deck. Don't make me look at too much more. Be excited, be passionate, be genuine. Don't give me a ton of FOMO, because all of a sudden you start making me feel like there's a ton of pressure. And if I don't write the check now, you know, everybody's going to be swooping in and taking it out from under me. My husband and I have this running joke at FOMO rapidly becomes JOMO, the joy of missing out, because I didn't want to get involved with that anyway. So that's sort of my just be authentic, be yourself, and be realistic, right? Part of it's salesperson and part of it is downright realist about where you can go and what you want to do.
I want to add one really quick thing on the angel investing thing, because when I was, you know, I never thought I have a balance sheet to be able to write 25K checks. Like, that is a lot of money, right? So like, I don't want people to feel like, okay, well, this is all great talk because I don't freaking have 150K sitting around do nothing and be able to wait for 10 years because these companies take that long to liquidate. So one trick that I've heard actually honestly from a lot of junior venture professionals, what they do is they cobble together a syndicate, meaning, hey, Jen, me, and Chenzi, we like each other. We have slightly different networks. And we collectively as a check can be 10K. But, you know, each of us means like 3K, which is much more manageable. And we share deal flow. We kind of run like a little fund. We can like sharpen each other's like investment chops. And this is kind of fun anyway. So I've heard a lot, you know, I think I would encourage people to think about that if you're actually interested in getting in a game, because at the end of the day, you have to start building a portfolio somewhere. And I don't want people to think that like only very privileged people can do it, because it is a lot of money that gets tied up for a very long time.
Yeah, I agree. And so my first investment was 20K angel investment. And at that time was a lot of money for me. But I did it because I believed in the company, and that turned out to be a great decision for me. But I can see that, you know, it could go the other way as well, you know, if I didn't pick it correctly. So forming a syndicate, sometimes I've seen folks forming an LLC for a particular investment and then another LLC for a different one that works, because then you could just say, here's a legal entity and each of us going to put in however much money, and you don't have, I'm not sure you have to go through the accredited investor for that kind of thing. It may be if your investment is minor, maybe you don't have to go through that process.
Well, I want to thank our fantastic panel today, Melody, Jen, Chenzi, Christina. Thank you so much for sharing your insights, and thank you to our fellow alumni for joining us today.